If we look at the Aussie dollar pair, I've done the weekly Fibonacci wave, and we can see that overall the pair has done well, more or less a double bottom, and from there on it has also touched the 161.8% Fibonacci retracement zone. If you look at it on daily time frame, it becomes more convenient for us that the pair is still on a bearish run. So the trend is overall bearish. We don't have a confirmation for bullish reversal. However, though, the last two small waves that we have is an indication for possible reversal. And this would be possibly confirmed only if we see the reversal from the 138.2% Fibonacci retracement zone. On daily time frame, we can see that the daily candle that we had is a continuation fake candle. If you participated in the webinar yesterday, we were discussing about candlestick strategy. We actually did discuss about it. Whenever we see this kind of candlestick formation, which looks like a sword but on a bearish market environment, you don't really look for a reversal yet. So possibly with today's fundamental developments, we could expect the trend to go further on bearish side. At least my current expectation for now is towards 0.70 level. So that makes more or less 60 pips from where we are now. If you go on hourly time frame for intraday opportunity, we can also get rid of this comment that I had, and we would see that there is an upcoming divergence on MACD. It's still not confirmed. Basically, we have a lower low compared to the previous lows. Meanwhile, MACD is making a higher high over here, with a possible action that we could expect the pair go on a bullish side. On the other side, we have also 50 and 200 moving averages crossover. Basically, whenever the 50 and 200 moving averages crossover just like that, at the moment we have a dead cross. Basically, the 50 moving average is going above the 200 moving average. Death cross is an indication, although on 1 hour time frame is not very good, strong indication, but nonetheless it's a bearish indication. So unless we see the break above the 0.71 level, I will not expect a bullish run for this pair for today. If we go ahead and take a look at on GBPUSD, the cable, we can see that after our entries that we were setting at 1.4170 2 weeks ago, which had triggered, and we already exited it, by the way, at 1.4650 level. So now we have shorted it from 1.4650 level, and we are looking for the 88% custom Fibonacci retracement zone to be triggered in order for us to exit our entry. 88% custom Fibonacci retracement zone stands at 1.4333 zone. It's not a common Fibonacci retracement zone. It's a custom one that I use myself. So far for yesterday, the pair went pretty close to it. And at the moment, since we have the Janet Yellen testimony coming up for tomorrow, and the market is moving basically on the sentiment that the NFP figures were disappointing, and there is a chance that the world is going into another recession. So we are in some kind of limbo right now, that people wants to short the pair, go for a stronger US dollar, but on the other side, the fundamentals from the US, at least the most recent ones, have been disappointing. So they are going to be waiting for the Janet Yellen testimony and look for positive sentiment in her speech in order to be able to follow the US bulls, USD bulls for the coming days. But for now, let's also take a look at hourly time frame. we can see that the 200 moving average is sloping upwards, which is a sign of an overall trend becoming bullish. Meanwhile, the 50 moving average is sloping downwards. I do suspect that if we see a break above, basically right outside the highest high of the last hour's candle, we could expect the pair to go on a bullish side, given the fact that the difference between yesterday's lowest low and 88% Fibonacci retracement zone was basically less than 20 pips, and that has been that level overall has been a strong support level. So if that is confirmed and we see a break above the 50 moving average, just like somewhere here at 144.80 level, we could expect to long the pair, and our targets would become immediate at, of course, the 50% Fibonacci retracement zone, which is at 1.4590 level, more or less. Then from there onwards, we would be once again aiming for 1.4666. And if that level is broken above, I'll be going for a 1.4870 level. That's my overall bullish target for the GBPUSD. If we zoom out a little bit in order for us to see how the market is really doing, let's make it like this. We can see that the current level that we are at is a very strong previous resistance and support level. So at the moment, it's a very strong support level. So nonetheless, we could expect this level to act strong for now as well, and we could expect to see, as we are anyway expecting a bullish run for the fact that we are anyway having a higher high and higher lows for the most recent wave that we have had. I'm referring to this wave, and that would give us a possible good opportunity to catch the bulls and follow them. Let's go on EURUSD. In our last webinar, we were discussing that if the pair breaks above the 1.0950 zone, we would be looking for bullish continuation. Well, that has happened. We saw the level being broken, and our immediate target was at 138.2% Fibonacci retracement zone, and that was at 1.1240 level. That has been accomplished. We have already exited it. Unfortunately, the NFP didn't really create as strong momentum in the market that we would have liked, but nonetheless, our NFP targets are still in place. So if we see a break above the 1.1240, we would be expecting to see the pair to go on a bullish side and continue its bullish development towards 1.1350 level, and above 1.1350 we would be looking for immediate targets at 1.1550 level, which is at a 200% Fibonacci retracement zone. But whenever we would have the 161.8% Fibonacci retracement zone confirmed or tested, we would then be seeing a quite decent reversal or correction wave. Okay, that would mean that you could expect to short actually the pair from 1.1360 level and use some approximately 40 pips of stop loss that you could use, and your target could become at 1.1236 level, which is at 138.2% Fibonacci retracement zone. Looking at it on hourly time frame, we can see that the 138.2% and 110% Fibonacci retracement zones are very strong levels. So each time the pair has touched those levels, it has reversed backwards. So within these levels, we are just looking for a limbo. It's up and down. Okay. So nonetheless, if you are going to be scalping, you can scalp between these levels. Each time it touches up, just short down, and it touches down, short upwards. But that generally is a loser way of trading, because you would end up being caught by the market. Nonetheless, you you could and you should be looking for actually longing or shorting above or below these levels. So short below the 1.10 level and target the 200 moving average, 200-hour moving average. Sorry, short below 1.11, not 1.10, and target 200 moving average at 1.1020 level, and long above 1.1240 level, and target at 1.1350 zone. This is for euro dollar. Now let's take a look at our biggest winning tradable instrument for the last 2 weeks. If you were following my entry from the previous week, where we said that losers are going to be trying to short the gold from 1,130, 1,140 level, and I was telling that it is not a short opportunity yet because of the fact that we had a continuation candlestick formation over here. I'm referring to the candlestick of the 2nd of February. So if you look at it, that has been accomplished so far. So if we go ahead and take a look at the market, and we basically put our Fibonacci just like this, and take a look at the market to see how much it is. So it is 850 pips more or less market development, or you can also put it actually over here. That would, I think, be the best one. So it is 620 pips more or less market development. So that makes, if you go for 1.5 of it, it makes approximately 900 pips. So at the moment, from the candlestick strategy point of view, there is a possibility, it's not a confirmation yet, that the market is going to be rising towards 1,222 level. That's the possibility. However, now let's take a look at the pair from Fibonacci analysis point of view and see what can we really expect from this pair. And I'm going to choose this level so far because of the fact that it looks as a very good Fibonacci wave that we could target. Let's make it a ray so that it continues. So continuing on daily time frame, we can see that the only resistance that we saw for this pair was at 38.2% Fibonacci retracement zone, and at the moment the pair or the tradable instrument is bouncing off the 138.2% Fibonacci retracement zone, which is at $1,198 per ounce. So that being said, if you are going to be looking for long in the pair, you need to make sure that the price action breaks above the 1,198 level. Meanwhile, I also expect to see, just in case if the market drops to this level, I expect the market to reverse from $1,161 level. So you can expect to put a pending buy limit order even, and look for long opportunities. Your long opportunity, the first target will be at 1,177 level. The second target will be at 1,198 level, and final third target will be at 1,214 level. If you look at it, it is also very close to the target of the Fibonacci, the candlestick strategy that we just discussed a little bit earlier than this. So 1,216 level is pretty close to 1,222 level. So it makes it for us quite interesting to really look for that level. But whenever we see the pair reaching to 1,222 or 1,216 level, that will be a very good opportunity for us to go against the trend, but of course cautiously, and look for the best opportunity for shorting the this tradable instrument. Okay, the biggest question though you should be asking right now: what is the main reason pushing the gold up so far, at such a steep phase? Basically, just yesterday it moved by more than $35 per ounce. It made the highest level since June so far, and that's a very strong level. Okay, if you look at it, the main reason behind it is because of the uncertainty. Okay, while the Fed was commenting that they're going to be hiking their interest rates, now there is a fear in the market that there is a possibility where the Fed will not be hiking their interest rate. So that's also the main reason. Fundamentally, people will be watching the testimony from Janet Yellen for tomorrow and the day after as well, and look for the opportunities on what she will be telling about the confidence in the market. And that's going to be the main and the most important event for this week so far. Meanwhile, for today, if you are able to watch the fundamentals, there are a couple of news that you should be watching. The first one is NFIB, Small Business Optimism Index. You can just type it, NFIB, Small Business Optimism Index. And if that index is positive, we would be possibly seeing the gold coming downwards. The next one that you should be looking for would be job openings and labor turnover survey results. Okay, it is very similar to unemployment and employment data. Job openings and labor turnover survey shows how many new job openings have been there in the market. And okay, it's not the major market moving event, but nonetheless it will create some kind of friction in the market. And finally, last but not least, results of the $24 billion 3-year note auction will also be announced today. It's 1 p.m. New York time, that Eastern time that we are talking about. This will be announced. So this is so far it for today. If you have any question, feel free to ask it, and I'll be more than happy to answer your questions.